Hey guys, welcome again. Thank you everybody for joining us. So today we're going to go over this Kingmate options trading strategy. Now, I specifically myself use it for SPX 0DTE contracts, trading the S&P 500 index. But essentially, I feel like you can use it on anything if you tweak the plan around and, put the right context on what you want to do. So for me, first things first, for the plan, it's like it has to have a specific technical conditions when I'm actually trying to use this strategy, because this strategy more involves like a tactic with contracts more than necessarily a price action strategy, but it aligns with the right kind of price action. That makes sense. Like it needs it. So let me just explain it basically. So price needs to be interacting with a valid unmitigated daily supply and demand level that lines up with the corresponding 4-hour time frame price level. Basically, refine daily demand. I don't have to spell it out. It's not our first day here. Everybody should get the gist of that. If you don't, we can go into it further later. But so the real gist of having this technical parameter though is because the way we're playing the contracts, we want a big move in price. And we at least want the conditions where there will be a big move, because there are just times when price is not going to move 50 points, 60 points. Like you have to understand timing a 50, 60 point move on SPX, like on the S&P 500 is essentially like the equivalent of timing a 400 to 600 point move on US 30. You know what I mean? Like that's like not almost like and that's a nice liquidity cycle move, like through a whole range and everything. Wherever we're expanding up range, wherever price is moving, that's like basically that's a good decent move. Like that's exiting or entering or creating a new range kind of move. So you're not just going to get this every day, and you're not just going to get this from any random kind of price action. That's why we have these kind of parameters, so it's like we're not going to even waste our time trying this shit if like, what I'm saying, our stars aren't already aligned for it to work. Now, when we get to the contract selection, what we want is way, way, way out the money. Now, I know this is going to sound crazy because normally people will tell you to trade in the money, out the money. Whatever you're doing, you know what I mean? There are a variety of contracts, obviously, because there are a variety of different ways to invest, a variety of different investors and tactics and ways you can use it. Now, I'm not saying that I would only ever trade out the money contracts or that I would on a day-to-day basis. What I'm saying is, in this situation, this is why we're using these out the money contracts, is we specifically want to get them and make sure that the Greeks are on point with a gamma ratio of 0.04 or higher. Between 0.04 to 0.06 is like prime. And basically that if you understand like a little bit about the Greeks, the gamma is basically like your exponential ratio factor. So it's like it basically, if price gets volatile at this point and we start getting a surge in price, how much more is price going to start, like the options Greeks are going to start aggressively flipping, you know what I mean, to say it in layman's terms. Like there's a whole bunch of math and shit that if I started talking to, I just go to blah 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 blah. So we'll get into that, but that's why that's key, just to give you a little base of knowledge on that. And then you want your influx volatility, your IV, to be at 62% or lower. The reason why that's so important as well is because it doesn't matter how you're timing a move. If that shit's already priced into that contract and your contract's way out the money, it's like stepping in dog shit and then pissing on your foot. You know what I mean? It's like, dude, like you're already doing, like you're already in a shitty stepped in shit. You don't want to make it any worse, because out the money contracts already take a lot to move. You know what I mean? That's why we want the bigger move. But this is where it comes into play, that comes to our benefit, where we want the bigger move if we're right, and it takes a lot of a bigger move to move the contracts. So basically you buy 100 contracts, you know what I mean, whatever how you want to tweak that is to you, but in my situation strategy, buy 100 contracts, and then your downside risk is capped because of the way the Greeks flow and where your contract is out the money essentially. So the reason why you're making money is because of quantity and then strategic planning of the move that's gonna flip those contracts, you know what I'm saying, exponentially. Now, if price goes against you, on the other hand, here's where it saves you. Now, it's also a bad thing because say you like you only get 5 or 10 points in your, like say the move is a bust and you really don't get any movement in your favor. Well, of course, then you won't make that much money. You know what I'm saying? Like say the play is just a dud. But win, lose, or draw, you only stand to either lose a little bit of money, make a little bit of money, or make a bit of money. And that's a big part of trading, honestly, especially if you like when you really want to get strategic. Like, so that's what's so important here is price has to literally go 50 points against you for you to even like destroy these contracts, or price has to go significantly like 20-30 points straight with no chop in order to really just destroy your contract, because your contract's already out the money. So really, to an extent, your downside risk is already capped at around like 30%. Like on the play I'm going to show you, the most downside that ever was like $200. You know what I'm saying? And when you see the amount of like drawdown that was on the chart, it's going to be like, okay, normal 0 DTE contracts would have been at 0. So let us actually get over to that over here to explain this. So I'm going to show you guys this play. This is actually like the second time I ever ran this trade. So I had one trade where I was thinking of it, and then I was still working at this time, so I was at work, and then I kind of came up with the plan. Then I tried it, and the first time I tried it, I kind of like fumbled the bag, you know what I mean? Like I was still like overthinking and stuff. You know, this is the very, very beginning of my trading still too. And so you know, I was still working through it, and then I came to it, and this was the first time I really like applied it with all these parameters, you know, laid it out in the playbook and everything. And so this was like my daily little note I made on it the first time I applied the strategy, yada yada yada. You know, see, like that's the main thing that I say is like the timing isn't so much important as long as you're in the right direction. And that's what's so like good about this. So as you see, options, we bought 100 put options. And obviously all like around like $10 or some shit like that. We had all the right Greeks on the contracts, paid our commission, and as you can see, took a really, really early entry. And even with the early entry, we still only saw a downside of what, like $275 here. When on normal contracts, you know what I mean? Like if you bought $1,000 0 DTE contract, that contract would have went to like $200 at that point. Then I mean, you just still came back to make money, but you would have saw 80% drawdown on your money. Whereas using the Kingmate strategy, you see what, to like 20%, 30%, you know? So, and then as you can see, like I start dumping. As soon as I get my pump and we start dumping, I'm dumping because I understand where I'm at in my reactions. You know, that's all goes to your technical planning. Like I won't get too much into the technicals because this is, like I said, it's more of like your technicals are already in sound, but this is just like something saucy to throw on top. You know what I mean? With like whatever you're trying to do, like something you'd be like, oh, I know I'll probably get a good impulse from wherever I'm at right now. Like, you know what I'm saying? Like I'm looking for this move, even though I'm early. So this is what I'm gonna try. So I know even if I might be wrong or whatever, I can still make money here and not lose a lot of money and still make a lot of money. And this is like with options, because I feel like that's so hard in options. And like when I figured that out, I was just like, all right, cool. Like it was just something that was really cool for me personally. That's why I like to share it. So yeah. And like I said, you know, I just started dumping contracts. Where's the executions? You see, just started dumping them. So yeah, we bought them. And yeah, so I bought 100, and you see I got most of them at $10, and then I got the rest of them at $15. Then they instantly, you know, when we start dropping, See, oh, that's the thing too. You have to understand, like my downside risk is capped here. Like because there it's a my gamma and my IV is right on them. They're zero DTE, so they're exponential factored for volatility. So all I need is impulses in my direction. Boom. Then they're $10. The lowest they're gonna go to is what? $5. So when Price did this, in all of that, I only lost what, like 250 on them or something like that. You know what I'm saying? Like literally, like, yeah, because it was like $275 drawdown. So I lost $2.75 on the contracts from all of this fucking bullshit. But then when it was time to go, as you can see, if I held all the contracts, they flipped 150%. So it would have been it would have been $1,500 net profit if I would have held all of them. But as I said, like, even back then, like I always instituted that I'm playing to be here another day. Like I got a good strategy, so I'm gonna let my plan work. As you see, I got rid of 50 of them, so automatically secures my profit, covers my commission. So now if I go break even on them or whatever, at least I didn't lose no money on the day. Successful strat, you know what I mean? Then I just start letting them off as we trail down. I got out right in time, and price can started reversing. You know what I mean? Literally never came back. So overall, entry could have been much better, obviously, but yeah. So, and yeah, these are just like little notes, from then of little technical stuff like entry model stuff and everything from playbooks. But yeah, if you guys have any specific questions or anything you want to ask, just let me know. And so yeah. Other than that, I mean, that's kind of really like what I had to show you guys. Like I said, if you guys got any questions or anything, let me know. Anybody wants this little thing for reference, let me know. I got you on that too. And yeah, if you guys want to like look at something on the chart real quick too, let me know what's up with that. And other than that, I mean, I'm gonna get out of here and get into some other stuff. Okay. Oh, I'm glad you asked me that. Matter of fact, thank you. So that's why I forgot too. Good catch, Miss Peters. That's why I forgot. So Charles Schwab just took over TDA. So my Thinkorswim account is getting transferred. So I can't log into it because it's getting migrated. So I don't think I'll be able to get into it until tomorrow or whatever. But that's why I forgot, because I had to go on Robinhood because I wanted to show you guys the actual contracts, like how, you know what I mean? Like in the thing, so you can actually see where to find them. But I know a lot of people use Robinhood, so boom, this is perfect anyway. So I'm just on my Robinhood right now, and as you can see, we got the contracts, calls, change. Wait, where are we? What's going on here? Okay, calls. Oh yeah. So you know what I mean? You go, I'm just randomly all the way up. You see how the gamma here is 0.00. Oh yeah. So sorry. That scratch that and fix that. It's 0.004. I was off by a decimal, but you get the gist of what I'm saying. Like this is where you see the gamma at. You know what I'm saying? The delta and all of that is like, it matters, but it does, like, it depends on what you're doing. If what you're doing here, it doesn't essentially matter. But you see how your implied volatility is super low. So that means basically it's just telling you that like nobody's expecting price to come anywhere near here today, or like within the expiration of this contract. No one's expecting that shit at all. So if it happens, this contract will go up like so much, like literally, what is it, like 84%, like exponentially more. You know what I'm saying? Because of that kind of volatility of that move is not priced in. So it has so much more explosive power of gain on the contract. That's basically like what the IV is telling you. So in this situation, like say, boom, we will want, okay, we will want 100 of these contracts right here. Perfect. I will come in and buy 100 spot contracts. Like, as long as it fits my parameters, I see my implied volatility is low. My gamma is right. Oh no, so yeah, I was right. Never mind. That's just so far out the money. That's what it was. Never mind me. I'm a madman sometimes. I'll be all over the place. But yeah, so this is our gamma. You know, we're checking our Greeks, and like I said, you want your gamma not to be really below this, because then basically, like, once your gamma goes below like that 0.4, like once it starts in that 0.3 point, like basically there's not going to be no exponential volatility within like the standard deviations of the how the standard deviations of price in your asset, your equity stock move, because it's not going to affect the contract that much. Basically, like, no, like, say like your theta isn't going to flip as fast, and your delta is not going to flip as fast, so like your contract's not going to make money as fast, basically. Just to put it like in a basic way and not have to like make it so scientific, you know? That's like the easiest explanation. So you want your gamma to be a point, you know what I'm saying, 0.04 or higher, because your contract is just going to make more money with the price movement that you get. It basically is, you're just in a situation where it's worth it. Like, it's like you just want everything primed up to where it's like it's worth it to put my money on this horse. You know what I'm saying? If that's a 0.03, that's a reason not to take this trade, or at least that's the reason not to buy that contract. Like, it's like they always say in trading, always look for reasons not to do anything. Like, that's like the biggest thing, I feel like, you know what I mean, in trade. That's a very, very big key. Always be looking for a reason not to do something. Bro, because it's so easy to find a trade. It's easy to have a reason to not take profit here, to hold, and or to close early and not stick to your plan because you got a bunch of money. Like, it's always easy to like have a reason to just do some shit. Like, start asking yourself and make like reasons not to do something. So like, that's a reason not to do something. Okay, this contract won't make as much money. Like, if I got a 20-point move that I'm timing right here, this contract right here won't make as much money as this contract will make. I understand that because I did my homework and now I understand what I'm trading. So I can look and, okay, I'm putting myself in a better situation. If you just saw the gamma just flipped and went up a little bit higher on this contract just now. So like, that's good. You want your gamma going up. So, you know, and like I said, this is really like just like a layman. So I'm not saying like this is the key to all options, contracts, trading, and strategies. Like, this is, in this specific situation, the kind of things that you just want to look for. That's all. So yeah. Yeah, here's the thing. You don't have to pay attention to the Greeks or anything, and a bunch of people will tell you not to. But this is what I would say. If we're being honest with ourselves, bro, niggas have like, bro, niggas have PhDs. Just to put it simple like that, the people that work at these investment banks, these private banks that are actually really dealing in these markets, even people that work at proprietary trading firms and trade investor money, they literally understand all of these things. And these are the people you're trading against, because they trade options. Like, you're trading in the same exact market as them. You know what I mean? So you have to understand they're doing things like how what I'm doing is like the baby steps into getting to that high level. Cause like, they're on some high level shit. Like, if you go into like the iron condors and all that shit, like, they understand all these different ways to play options. Because if you really know how to play options, there are these ways like how I'm showing you where your downside risk is always masked. It's just that, like, to me, it's not my stilo, so to say. Like, it's like I can do it and make money, but it's like I feel like I can make more money faster or with less money somewhere else. Like, I feel like options is a good game. Like, don't quote me on this. It's to each his own. Like I said, like, everyone can trade. I just know how to do it, and I won't necessarily say I don't care for it. It's like I don't have fun doing my options homework. You know what I mean? Like, doing all of this shit, understanding all these standard deviations, trying to learn how to play all these different option strategies, going through options contracts early in the morning, seeing what's gonna like should be good, then checking them and double checking them, like all those little nuances. That shit's not like fun for me. You know what I mean? So that's I just respect it enough to like, yeah, like if I'm not gonna do, because I do forex homework, you know what I'm saying? I do CFD homework. I've started doing futures homework. So yeah, like I don't like doing options homework because options homework is like math. Like it's literally that's the thing. Options homework is like kind of like the math homework in trading. Like uh CFD homework is like for me is like my geography homework and training. It's like okay, I get to like go see what the fuck's going on around and learn different shit, like and correlate things and what I'm saying, play different ideas out and then see how they can kind of correlate and maybe play out. It's just like I say, it's that's the beautiful thing about these markets. There's something for everyone, and just because you learn something and you can do it well doesn't mean that you have to stick to that if it's not fulfilling you. You know what I mean? So, but yeah, I'm glad you got a kick out of that options homework. But yeah, see, I don't know. That's why I said I just take it that serious, bro. So yeah, options homework's not funny, not fun. I mean, it's funny but not fun. So that's those. Like I said, sorry I couldn't show you guys on Thinkorswim because it does look different. The option chain is different. I kind of do think it looks aesthetically a little cooler, but yeah, who cares? Little nuances. But yeah, anybody wanna look at something? See, look, I'm telling you, this is your stilo, like this is your thing. Like, and if you really get into it, because there's formulas, I gotta get it because I had it somewhere. I gotta go back to the site I was reading. But there's like the Dobbs theory, like options are priced a certain way. People will tell you like, oh, you can't calculate how much a price is going to be off of a move, and it's like, no, you actually kind of can. It's just very complicated math and shit that if you're not like a high level mathematician, are going to be able to do. Like, you know what I'm saying? But the thing is, if you understand completely how the instrument works, you'll always be in a position to use it to your like advantage. Like you'll start understanding little different strategies and ways that you can do things. Like you know what I'm saying, like this, like little bullshit strategies and build them into bigger things. But yeah, if you guys, I know everybody mainly here probably trades options. So yeah. NQ. I was just doing some back testing. But yeah, I'm just throwing up a chart real quick, guys. Yeah, I got you guys. No problem. Yeah, we'll do another thing meetup because yeah, it's gonna be cool. Oh, so you got TOS. So they transferred your account over to Schwab already, and you can get in, or you know what I mean, or they still got your shit frozen. Because I don't know if like my shit's on hold up. You know what I'm saying? Like they're taking too long, or I shouldn't bother them and just be patient. You know what I mean? Like I don't want to be a Karen. Like yo, bro, tomorrow morning, what's up? And they're just taking their time. Like I'm not the only one, basically. So this is what's going on NAS. Expansion, sweeping. Hmm. So coming into the week, I mean, like I said, I don't really like to predict some shit. I'm more like looking at the chart, right? When like price has gone through at least like two sessions, like you know what I'm saying, like that Tokyo and then like that Frankfurt going into London. Yours is working going in. All right, I'm about to try again right now. Let's see. See. Sorry for the hold up, guys. Let me see if I can get there. Still giving me the same bullshit. See. Let's see. Why don't you let me in? Sorry, I'm like going through this long ass process trying to get the security code to get in. Sorry about the hold up, guys. 1 second. Let me read this email from them again. See, nah, yeah, you're right, Miss Peters, because they say at 5 o'clock it's supposed to be working. They just switched it over at 5 o'clock. So what the fuck is going on? See, but it's not working on the Charles Schwab website. I just thought I was being impatient. You about to have me emailing these people now, getting on their ass. I promise. Yeah, nah, because you know how it is, like when you're like, I don't want to be impatient. Like I want to make sure it's not me, you know? But damn sure say 5 o'clock for futures and forex, and I've got margin, so I got forex, so I should be able to log in. It's weird. Like that. Um, but yeah, you guys want to look over anything on the charts real quick, or go over anything? Any questions before I dip out, or go through any more gamma thingies or anything like that? Speak now, please, or forever hold your peace. No problem, guys. Like I said, I appreciate you guys coming out here, hanging out. You too. Enjoy the rest of your day. Hope everybody enjoys the rest of their weekend, even though it's coming to swinging to an end. Again, thank you guys for coming. Like I say, keep yourself accountable. Let's stick to our plans and make some good money and be happy. All right. Everybody enjoy your blessings. Thank you again for your time. See you guys. When you think you end the meeting, but it doesn't.